Okay, folks, thanks for joining me today. I really appreciate it. What I'm going to do here is to give you the best of what I would have liked to have learned 50-some years ago when I first started doing this. I originally started, just looking at a bar chart, and fortunately I had a great mentor in John Hill at Futures Truth. John is 93. He still trades every day, as do his 3 children, and he's been a real focal part of my life for many, many years, and I always thank him for everything that he taught me to do. What I'm going to show you here today is what I think is the best way to look at the markets. It is not anything that is really too hard to understand, but you do have to be able to add and subtract and multiply and divide. That's the one thing that you need to do. Remember that when you're dealing with pattern recognitions, you're dealing only with numbers, and you don't have to worry about anything that the market is trying to tell you as far as fundamentals or news announcements or fake news or whatever. You're just looking at what that bar chart is, because that's what's really telling you what's happening. If prices are going up, there are more buyers. If prices are going down, there are more sellers. We're going to start out by starting where technical analysis starts with. The picture that you're looking at here is a oil portrait of Pythagoras. It was painted by Augustus Knapp. This painting is in the Philosophical Institute on the top of Mulholland Drive there in Beverly Hills, and it is at the Manley Hall Institute. And if you're ever in Los Angeles and you want to see a movie star, that's where you go, because you'll see him there all the time. And they got a wonderful library and a coffee shop and, a lot of things you could do. And that's where I found some of these old books and stuff many, many years ago that dealt with sacred science, with which the Fibonacci ratios are an integral part of it. But if you're looking here at Pythagoras, Isaac Newton once said there was God, and then there was man, and in between was Pythagoras. Pythagoras was so smart, folks. This is 600 BC, remember. He knew that the earth was round. You can see it by the globe that's there on the left, but his whole focus on everything that he did was based on geometry. And as you notice that he's pointing to a parchment, showing geometric patterns, you can see right below that parchment the ABCD, A squared equal B squared C squared that he's so famous for, the Pythagorean theorem. He's holding a pyramid in his right hand, and above his head, you'll notice that there is a pyramid with 10 little intricate diagrams there, which I'll go into a little bit later, because I'm trying to build a case for the mathematics behind technical analysis. Remember, Pythagoras was so smart that he knew that the earth was round in 600 BC. He also knew that the distance between the earth and the moon was 256,000 miles. That's how smart the guy was. Unfortunately, a lot of people didn't like what he did, and he had to go into hiding and became supposedly the secret school, stuff I don't really have an interest in, and I'm not sure how all that works out. But anyway, this is where it all starts, but we're going to get to the easy part of this as we go along here today. The next slide we're going to look at is the spiral mirabilis. That's the Fibonacci spiral that we all know, and basically what this is showing you that the markets either go up or down in relation to this spiral. If they go up, they're expanding. If they go down, they're contracting, and that's what you try to do when you're looking at pattern recognition. This is a book this comes out of a very rare book called Little Book of Secrets. And basically what is showing here in the lower part of this is showing you the Fibonacci sequence of numbers. And as you can see, you have 0, 1, 1 is 1, and you have 1 and 1 is 2, 1 and 2 is 3. What's important about this, folks, is that you can take any two numbers in nature. You could start at 35, and then you could add 1,306, and if you add the two of them together, and you get down to the 8th integer, you're going to come out with a relationship of 0.618, and it stays there until infinity. What this is telling you is that nothing is new in the market. I mean, it's always the same. All you have to do is to try to understand where you are within that sequence, and that'll give you a big advantage. So that's really what this thing is all about, to show you that anytime you start with two numbers, you'll come up with the Fibonacci numbers. Once you add them together, and you get to the 8th integer, divide one by the other, and it'll come out to 0.618, and it goes higher or lower all the way out into infinity. Now, this next slide here basically is from April 17th issue of Business Week, which is no longer in business, and this was written by Dr. Andrew Lowe from the Massachusetts Institute of Technology. He's in charge of, the quants that are there. It's a laboratory of financial engineering. But what Dr. Lowe did was He looked at all these different patterns. As you can see here at the bottom of this, he did 800,000 observation over a period between 1962 and 1996, looking at different types of patterns, head and shoulders patterns, the three peaks in a domed house, three drives to a top, three drives to a bottom, triangles, pennants, and all the other patterns. The problem was with this book, he wrote, right after this article was written, this was in 2000. In 2002, he wrote a book called The Non-Random Walk Down Wall Street, which is roughly 700 pages of very, very intense formulas that I have no idea what they mean, far beyond my pay grade. But basically what he did was he proved that technical analysis, not only was it very helpful in speculation, but it also repeated itself with a great deal of confidence. And that's what this book was all about. He basically repudiated Burton Malkiel's book about a random walk down Wall Street, because Malkiel said it was random, and Dr. Lowe said, no, sir, it is chaotic, but it is not random. And that's what we look at when we're looking at pattern recognition, is for this repetition that we see repeating over and over again. Now, I don't expect you folks here to get this on the first run around, but I'm hoping there'll be a few people out there that say, this makes a little bit of sense to me. But believe me, I spent a lifetime doing this. It's been my passion. I love it very much. And I have been very fortunate to stumble into this stuff many years ago. Unfortunately, it takes a little bit of time and a little bit of effort to learn it, but it really is not too bad if you really look at it. If you remember that picture we had of Pythagoras with that pyramid above his head, this is a figure out of Dr. Lowe's book where they talk about the chaos game. And basically, if you look at that bottom triangle there, that was the one that was over Pythagoras' head. And what it's basically saying is that if you took two dots and connected them together and ran through the iteration 10,000 times, you're going to come out with this pattern that is on the bottom. That's part of chaos theory that people worry about. How does that have anything to do with trading? Not very much, but it does have to do with probabilities and numbers, and that's one of the things that that we look at here. I'll answer some questions towards the end. We'll have plenty of time to do that, and I'll see if I can answer them. This is when you're looking at a price chart, folks. Basically, you're looking at the geometric characteristics. You have a square. Within the square, you have two right triangles with the hypotenuses of those right triangles that are Fibonacci numbers, 1.618, and the square root of 1.618, which is 1.27. You also have the right triangle pyramid. You also have a circle within a square, and if you add them all together, you come up to the right, and that's what you're looking at. When you're looking at a price chart, you're trying to find out where you are within that axis of time and price of whether the market is ready to go higher or lower, and that's the key, to pattern recognition. It's a leading indicator. It's not a lagging indicator. I don't use oscillators. I haven't for more than 40 years. They are lagging. They don't help at all as far as where to buy and where to sell. What we're looking at here, and I'll show you the patterns as we go through, we're looking at a spot where we can enter the market with the least amount of risk, with the maximum amount of profit, with a probability of better than 6 out of 10. That's what we're shooting for. And if you learn the stuff the way you should be able to do numbers like that. But it does take a little bit of time and a little bit of effort. But that's what we hope to show you here, is it does happen. Now, this is from a very rare book by William Garrett. It was called The Thrust Method of Cycles, and it basically showing the same cycles, but it's showing the square and the ellipse and how it expands by the Fibonacci numbers of 1.618, 2.618, and pi, which is a circumference of a circle. Here again, you don't need to know this. I just wanted to bring it to your attention because this is where these numbers come from and how they are so very, very important. What we do is a whole lot easier than that, folks. Basically, what we're looking at, these numbers, and all numbers are related to this diagram going back to the Babylonians. Basically, you're looking at 1 has 1 angle, a 2 has 2 angles, a 3 has 4 angles, the 4 has 4 angles, the 5 has 5 angles, the 6, 7, 8, 9, and of course, there's no angles and 0. So that's where these numbers, actually come from. This is what Fibonacci did when he discovered this Fibonacci sequence when he was in the when he went to Egypt back in 1242. He wrote a paper called Liber Abaci, which means freedom from numbers, and he changed the world from Arabic numbers to arithmetic numbers, and that was a big change. Okay, now if we look at the patterns that we're going to see, you'll notice that we have, there's actually 12 patterns. There's actually a couple more than 12, but the one I want you to focus on today, folks, is the real easy one. This is you'll see the first on the left-hand side, that's the ABCD pattern. You can see the ABCD pattern on the downside. There's also a couple of Gartleys there, and then there's simple retracement patterns. But the main ones we want to watch is the ABCD, because that's what all markets do all the time. They're doing that today as we speak. We're doing the same thing. And if you look at this, this is 6 through 12. You'll notice here we've added a couple patterns. You'll see on the second set there, you'll see the 1, 2, 3 drives to a top, 1, 2, 3 drives to a bottom. But within that, what do you see? You see the ABCD pattern. That's the pattern that controls everything that you're doing. Just stop and ask yourself the question. The market can only do 3 things. It can go up, it can go down, and it can go sideways. And sometimes it does all 3 in one day, depending on the time frame you're looking at. So when the trend that you're looking at, you have to ask yourself, what time frame is the trend that I'm looking at? Because the time frame in the S&P for the last 2 days has been down, but if you ask what it was for a week or a month, it's been up. So you have to ask what that time frame is, and that'll give you a better idea of what you're really trying to see. So these are the patterns that you're going to see, and I think it's pretty easy to do. By the way, you get a book because you signed up today. If you sign up with the service that I'm going to offer you, you'll get a book called The Opening Price Principle that shows you how to use the opening price with a great deal of success, which is really good, and also shows some of these patterns in there. And you'll also get the videos that I make every day showing the trades that I'm doing, and also the emails that I send out, and then the newsletter that I write for our hedge fund that comes out every week, where we cover all the commodities and all the major stock market stuff and foreign exchange, because foreign exchange is my favorite thing to trade of all the things that we do. Okay, the next chart, this is basically the Fibonacci ratios that we use. 618 and 786 are contracting ratios. 1 is nothing more than an equal ratio, AB equals CD, and then the expanding ratios are 1.27 and 1.618. And of course, 1.27 is the square root of 1.618, and 786 is the square root of 0.618. So that's where these numbers come from, and you can do it all with a little handheld calculator. You don't have to have anything really fancy to work with. You just have to have something really simple to deal with. That's the main thing. So the key here is to realize that this is really quite easy. Now, let me just show you where all this stuff comes from. This is from Leonardo da Vinci, his Codex book. Basically, what it's showing here is the ratios and proportion of man. If you notice the writing in the top up here in Italian, Mr. Da Vinci, Leonardo da Vinci was a little bit paranoid. He was ambidextrous. He could write with his left hand and his right hand with equality, very easy. And what he did was he wrote backwards into a mirror. So the only way you could really understand what was saying here, what he's saying up there, is to turn it around and look it into a mirror. That's why the book is called Codex. And Bill Gates bought it in 1986 for $20 million, and then he donated it to the Smithsonian Institute, where it travels the world 6 months a year, and the rest of the time it's in Washington. But what he's showing here are the ratios and proportions of the human body, and if you look down here at the bottom, they all come out to 0.618. This was also done in the pyramids back in 2500 BC, and if you look in the lower left-hand corner, you'll see 0.618, and you'll see that spiral where it says 1, 3, 5, 13, 8, 5, 13, 21. That's the Fibonacci spiral. That is also the DNA spiral. That's why we're all different. It depends on how our chromosomes line up along this spiral that determines our heredity and who we are, and that is this spiral right here is the main reason there's never been a murder conviction in the state of Arkansas, because they all have the same DNA. Hold on, let's move on to the next one here. All right, we talked about these numbers. Now let's look at how this really works in real life. This is the euro over the past 10 days. It's a 30-minute chart, and all I did was I turned it into a line chart just to make it easier to see. And what I wanted you to see is when you're looking at, you're going to be some patterns that you're going to see in here that you don't quite see until you get practice of looking at them. But what I want to do is just to show you on the next slide how easy this market is to predict just by using those Fibonacci ratios that we were looking at. Almost every single swing that you see here is related to those numbers that we were looking at. 618, 786, 1, 1.618. They're almost all there. And this is going back over 10 days. Well, it's been a couple weeks ago, but it's no different today. I mean, right now we're trading at around 118 and change, but when this was done, we were trading at 127, but nothing has changed. It's doing exactly the same thing today. So there's nothing, really hard about this at all. And remember, when you can see you have lower tops, right? And you have lower bottoms, so you're in a downtrend. So you want to be selling rallies, in the downtrend and buying dips in an uptrend. That's what you're supposed to do. Whether you decide to do that or not, it's up to you, but we'll see. Now, why is this important? Because if it repeats like this, and this is Apple, and you can see here that the Apple is doing exactly the same thing, moving in these same patterns, and there's that ABCD pattern that we look at, and we're going to look at some of these just to show you that what's happening in Apple is no different than what's happening with the euro. Sometimes it's a little more volatile than the euro is because Apple is in the news every 10 or 15 seconds, but that's just the nature of Apple. So that's one of the things that we're watching. Here's Apple on the downtrend. You'll notice, look at those numbers. You can see 78%. Well, 38 is the smaller ratio. It's a difference between 618 and 382. You add it together as 1. And then you can see the 1.618 expansion on the exact bottom. But it's just showing you that you're able to do this with active stocks. Any stock that's trading more than, well, it works on penny stocks too, but I would never trade a stock less than $5 a share. And I don't trade stocks at all. I basically trade futures and forex. I don't do any ETFs at all. None of that stuff has my interest at all. So we'll see what is going on. We're having some questions here. Let's just see if I can pop up with a few questions here. Okay, the angles and stuff, they're nothing more, folks. These angles are nothing more than a little bit of drawing lines. This has nothing to do with the work of W.D. Gann at all. I know a lot about Gann, but I don't do any of Gann's work. I don't do Elliott wave. I don't count waves, 1, 2, 3, 4, 5. I found that very confusing. The patterns that I use are much simpler to work on, and as we go through these, you'll see that I think they're simple. We'll have to wait and see. We'll take a look here. This is what you have, how you predict yesterday's. Look at this. Now this is also the euro, and what you're trying to do is to find out the range. Look at this, folks. Look at this ABCD pattern that's right here. That's absolutely perfect. It goes up to a 1.27 expansion where you're expecting the market to come down, and what does it do? It comes down exactly like it did 2 days ago. There it is. There's the same move down. If you go back here, went a little bit farther because it was expanding at 1.27. So you're seeing all of these ratios again, and this is the most actively traded thing in the world. This is thousands of times bigger than the S&P, folks. They trade $1 trillion a day in the euro versus the US dollar. So it's a really big one. So that's the main thing that you really want to know. Pretty soon we're going to come up with what I think is the most important slide, and oh my gosh, there it is right there. This is all about trading, folks. This is what you have to do. The previous person that came on, Jack Gleason, young man, had some really good, interesting things to say about Paul Tudor Jones, and this is the secret of trading. Nowhere on this slot machine does it tell you you have no chance of beating me. Does it? Nope. Nowhere on this slot machine does it say I've taken in $1.2 million more than I've given out. Nope. What it's telling you is if you put in, you could make 4,000 coins, and it's lighted up, and it's got all kinds of real shiny things. And what does it say? This machine accepts bills. That's right. But it doesn't tell you that you have no chance of beating me because the odds are against you. So you must think like a winner. A winner thinks, how much money can I lose? A loser thinks, how much money can I win? You have to reverse your thinking. Be concerned on the return of your money, and don't be concerned on the return on your money. Big difference. Okay, now the next pattern, this is the basis of everything that I teach. This is the ABCD pattern. I just want to show you what this pattern is. It comes out of a very rare book called Profits in the Stock Market by H.M. Gartley. I found this book in 1969. through my friend Don Mack, who ran the Investment Center bookstore. He befriended me and gave me that book as a gift. It's been reprinted now, but at that time it was worth about $1,000. In 1937, when it was printed and it was in loose leaf binder only, it was $1,500. He sold about 150 of them. There was only one or two that have ever been resold because it's quite a good book. But you can buy the book now through Lambert Gann Publishing and probably Amazon or whatever. They run about $100, but it's got all the patterns that we deal with here. But the main one, of course, is the ABCD pattern. And on page 249 of the book, he shows that when you have an ABCD pattern going up, you want to look to buy in an uptrend. You want to buy the retracements. We saw this in Apple. We saw it in the Euro. That's an up move. You have ABCD. You want to be, trading at C and trading at D. You could also trade at E because that's another part of an ABCD, and that's on the upside. If you look at the downside, there it is on the downside. That also was page 249. When I first found this in 1970, I was on one of those, I was young. Well, I've only been trading about 10 years. Yeah, I've been trading about 10 years, and I'd been on one of those runs that little poor boy from Indiana just got really lucky, and I was buying dips. I didn't know what short selling was, and the markets were going straight up, and I made a lot of money until I lost the money. Yet I find this book to my advantage because I went in and studied it. One of my professors at Indiana, when I got started doing this many, many years ago, pointed me to that book after I lost my money because it was that important to learn what technical analysis is, and I still am still learning to this day, which is fun. Okay, now this is IWM, which is of course the Russell 2000. What I wanted to do, you see on the upper left-hand side, that's the bullish ABCD pattern. There's the bearish ABCD pattern, and you can see them all through here, folks. There's the ABCD pattern here, ABCD pattern here, ABCD pattern here, ABCD pattern here, ABCD pattern here. You see it all the time, and this happens to be a pretty wild one, but it's tradable. It's the second largest of the stock indices. It's number one is the S&P, number two is the Russell, number three is the Nasdaq, and number four is the Dow Jones. So it's certainly tradable. So just try to learn this ABCD. That's the key. If you can see that, the other stuff will come out real easy. Here's Netflix. You can see the ABCD pattern here. This happens to be the Gartley pattern. I'll just mention this because we're going to be talking about it quite a bit. This was the best pattern that I have found. It's the Gartley. It's on page 222 of Gartley's book. I wrote my first paper about the Gartley in 1975 for Futures Magazine. I just become a member of the CFTC, and I did that article for them. And when I started writing my books in '87, of course I featured the Gartley pattern. Basically, what the Gartley pattern is you have an ABCD coming in at a higher bottom, and that gives you a very, very low risk entry point at either the 618 or the 786. This is what pattern recognition is all about. What you're seeing here in Netflix with the expanding here at the 1.618 number comes in. In fact, that was the high in Netflix before it had a huge break, and then this last run up, it didn't make new highs, but that's been the high so far in Netflix. But we'll move on to the next one here. There you see after it made the high, it backed off a lot more than that, but that just basically shows you the pattern and how it moves in a little bit different time frame. Okay, now this is the dollar yen. This is the yen versus the dollar, and I just wanted to show you that this is what Gann talked about, a squaring of price and time. You'll see the ABCD pattern coming down. You'll notice that the time down in the move is equal, and from low or from high to low is equal. So you have a beautiful ABCD that's perfectly symmetrical, and as you can see, the market does start to go a little bit higher. This is what pattern recognition is all about. And remember, the key to all of these is the ABCD pattern. That's the one that is that runs the whole show. This next one is the Gartley pattern. And as I mentioned, there's a misprint here. This book was actually published in 1930. I think he wrote it in 35 and published it in 37, but he only sold a few of them because it was $1,500. And in 1937, that was the cost of 3 Ford automobiles. But this book was basically cherished by many, many people and was very, very hard to find. I just stumbled into it, thank God. But it's about 500 and some pages, but the key pages are pages 200 to 250. Those are the pages that have the patterns that are there that also the Dr. Andrew Lowe worked with, and all of those patterns are there. There's probably about 50 or 60 of them, but I basically use about 12 because they're the easiest ones that you see all the time. All I really did was I added the Fibonacci ratios to these, and I gave a few of them a couple cute names like Gartley 222 because it's on page 222, and then of course the butterfly pattern, which is a Gartley pattern that is failed, and you go down to the next expansion number instead of stopping at a higher bottom or at a 618 or 78% retracement. I know what I'm talking about here is confusing to some of you. Basically what I'm doing is I'm throwing darts at the wall. I'm hoping that a few darts will hit a few of you folks out here that say, this does look a little interesting. It's a little different than what I'm looking at because I'm not watching any oscillators. I'm not looking at any IPOs. I'm just looking at a price chart. And if prices are going up, there's more buyers. If prices are going down, there's more sellers. And that's the bottom line of what we're trying to do. So we'll see a few examples of these Gartley patterns here. Here's the NASDAQ. You can see the beautiful ABCD pattern right here. I added some cycle work in here just to show you that there's some symmetry in the cycle, some lows to highs and things like that. And you can see the big ABCD pattern completing here in the NASDAQ before we had the what we called a big correction into early or late October, which was basically nothing. We got down to about 6,300, I think, and of course we exploded to the upside. But that's what it looked like, at that particular time. So that's what we're watching when we're looking at these patterns. We're just looking at time and price and trying to find where the next turn in the market is going to go. Here's one of my favorites, folks. This is the euro going back over, oh my gosh, this is going back to 1985. You can see all of the patterns that we're looking at here. There's a big Gartley here in 2000. My grandson was born then, and that happened to be a really monster move. You can see the cycles that are here. We made a major bottom here in 16, but we've had very, very minor rally up to 120 in the euro. This has really bearish implications for the euro, folks, because this cycle has gone up for relatively 8 months but didn't go anywhere. It was actually weaker than the other cycles. That usually means that you're getting ready to come down, and of course we're trading below 118 right now, so that's telling us that it is starting to go a little lower. But that's what we're watching. The top here was a butterfly pattern where you had the A, B, C, D pattern, and that's because you went above this high, so that makes it a Gartley, because when it exceeds the high, the Gartley becomes a butterfly pattern, and that's what you're looking at here. Here you have A, B, C, D coming in right at the it comes in at 707 on the euro because that's really close to 0.618 from a tradable standpoint, but the euro does follow the sequence of 707, which is the reciprocal of the square root of 2, and that's where the numbers of sacred science comes in, because you're looking at the numbers 1, 2, 3, 4, and 5, and looking at the square roots and the reciprocals of those, along with the Fibonacci numbers. So what you have to do is to select the number that is actually working with that particular commodity or stock at that particular time. It's pretty much, that's it. I mean, it changes a little bit, but it's not that hard. It just takes time to learn it. That's basically the bottom line. Okay, now the next one here is the euro on a weekly basis, and as you can see here, we're getting ready to go lower. You see we've already gone down here in 2015. This was a slide that I did back in 2014. I put it in here just because it happened to work. Wow, I did one that worked. This is a good thing. I should keep this, make it into cufflinks or something. Anyway, but this is what we got there, and then we rallied up to that 120 level, and this is a really bearish chart for the euro longer time. Here's one that I really want to show you folks. You can really gain a lot by watching this Facebook chart. Now Facebook, I want to show you what's really important about this. You can see the ABCD patterns here in Facebook on the way up. Okay, you can see that, but here's what I want you to focus on is when it came out in 2012. Let's just go to the next slide and show you what happened. Here's 2012 when we came out in May. The market came out at 46. We dropped 2/3 all the way down to 14. You see the beautiful ABCD pattern that was there? Then for the next year, we made a perfect Gartley pattern in June of the following year at exactly a 61% retracement at $23 a share, and the rest is history. This is what you want to focus on, because if you got an IPO, let it start trading and it'll give you some nice patterns. You don't have to buy it on these crazy days that they're really sucker plays. Wait till you get a nice pattern, to line up, because when you have a pattern like this, you got the odds, 7 out of 10 times in your favor, and that's the whole beauty of what we're trying to do as we're looking at this. So we'll see this. I'm going to have time for questions, so don't worry about that. We'll have plenty of time. This is the Gartley. I just wanted to show you. We made a double top in Gartley up here, or in Tesla up at that 390 level. You'll notice the Gartley pattern that we had in November of last year. This was right during the election, of course. We're right at a 61% retracement, trading at 180. We doubled in price up to 380. What we did is we rallied right here to 365 a couple weeks ago, and our target on this has already been made. We got down to $3 and $300, and we're looking for a rally back into about 320 to get short euro again, the Tesla again. But that's how we're watching. You can see the ABCD patterns as we're going. That's why the whole key is learn to find the ABCD patterns. The rest of it will fall into place. If you learn how to do it, it's really it's not rocket science, folks. It really isn't. Okay, now the butterfly pattern, as I mentioned, is nothing more than a Gartley pattern that has failed, and we'll take a couple look at these as we look. And then we have the 3-drive pattern that is really an important pattern, because it has beautiful symmetry. It is probably, well, the Gartley's perfect too, the butterfly's perfect too, but the 3-drive is actually one of my favorite patterns. I really enjoy, well, I love them all, but the 3-drive pattern is really a great one, because you are right in the mouth of the lion. There's a new movie out by Larry Williams' daughter Michelle is in it, and it's about Winston Churchill, and he says you can't argue with the tiger when your head is in its mouth. So that's when he was talking about the Germans when they were trying to take over Great Britain. But anyway, let's look at this 3-drive pattern. Here's Apple on the weekly basis. We made this pattern up here. 3-drive pattern. In other words, what you're looking at here is the second drive at 1.618. Now, what's happened since I did this chart is that Apple went to 175, and that was the exact 3-drive pattern right here. Apple is finished, folks, in my opinion. I think it's getting ready to have a big break, much like we had right up here. You can see the butterfly pattern here in 2012. We had the A, B, C, D pattern, stopped right at the 78% level. And look what we did. Then we came down here. We stopped exactly at 61%. Folks, you can't make these numbers up. You can't do it. This is, it's really that simple. So you got to be able to, try to figure some of these things out. Anyway, that's my 2 cents worth. I actually love doing this because this is how I learned, and I was not exposed to something like this. I had to get it through the School of Hard Knocks, and with my help of my mentors that I've had along the way, primarily John Hill, and also Bryce Gilmore was a big instrumental person. He wrote the Geometry of Markets book that explained a lot of these different things. But here's Amazon on the weekly basis. We did the same thing with Amazon. You'll notice back here in 2015 it was making a 382 retracement. Then we had the ABCD structure all the way to the top. It broke $170 a share, roughly 17%, and then of course it went up to the 1126 level, making it a higher high. But that was showing you the pattern at that particular time. That's what you're really looking at. This was NASDAQ. I'm doing this on an hourly chart just to show you this is where we were in October, right before we had the pretty substantial breakdown in here, and then we went up and made new highs. But that's the 3-drive pattern right there. You see drive 1, drive 2, drive 3. There's your A, B, C, D pattern right there, and that's what makes it such an interesting pattern. Here's gold. Here we are in a 3-drive pattern here. There's drive 1, there's drive 2, there's drive 3. That was the top of this last rally. We're now trading down in this level right here. We hit 1265 today, and I believe we're on our way to 1242. But you can see the ABCD patterns all the way. Look at it right here on the bottom. A, B, C, D. And folks, we are coming up to one of the best buying opportunities you're going to see in gold in a long time. The probabilities of gold going down into December is better than 8 out of 10, especially up until Christmas Day. After Christmas Day, the odds turn bullish, and so you want to be looking for a bottom in gold right after Christmas. The last trading day before Christmas is the 22nd of December, so right after Christmas, when you come back on the 26th, you want to watch the price of the gold because it's going to be making some type of a three-dive bottom is my guess, and it's the best way to enter because you're not waiting for anything to turn here. Look at the bottom where you have three drives. You're perfectly A, B, C, D. Why are you going to wait for a moving average to tell you you're going to buy it up here? You're going to increase your risk by $1,600? I think not. So that's why pattern recognition is so good because it gives you a entry point that is as close to the being in the lion's mouth as you're going to get. But that's what it's all about. It's all about the amount of money that you risk, not about the money that you make. This is Alibaba, just showing you the same thing. You can see here, Alibaba came down, boom, makes a beautiful three drive to a bottom, and now it's trading, plus of 200, I believe. So that's the main thing. And now this is about the trader's creed. This is from my good friend Mark Douglas. How he was my best friend. I tell you, he lived here in Tucson for many years. This is where he wrote the book, Trading in the Zone, here in my office. We lost Mark September 10th, 2 years ago. But the reason why you do this is you want to identify your edge. And our edge is what the patterns are. And when you have the patterns, number two is you define your risk on every trade. So we know that we're only risking, $3 to make 10. That's a 3.5 to 1 ratio. That's a very good ratio. And you must accept the risk and just forget about it. Don't look at the monitor. The monitor is not your friend. The monitor is your evil enemy because it's pulling out all the your psychological imperfections. When you're watching the monitor, as prices go up and you're long, you're feeling very good. And if prices are going down and you're long, you're feeling very bad. You want to take the feelings out of it, so don't look at the monitor after you put a trade on. Go look at something else. Go watch, Law and Order or, something else. What's that Charlie thing? You could go watch Happy Days. Do anything but watch the monitor. That doesn't help you. And always act on your edges because if you believe in what you're doing, you're going to be able to see that you're able to do this. And once you have that under your belt and you know that, I'm able to do this, then you know where you are. You're no longer grasping or asking people what to do. I hate it when people say, what's going to happen next? Hell, I don't know. It's just a number. I'm just looking at patterns. I really don't know what's going to happen next. All I know is I know how much I have to risk to find out what's going to happen next. And always, take some money out of the market. And the last thing you do is, be sure that you try to help other people no matter what you can do. The last one is really important. It says, I am consistent because I never violate these principles of success, which if you listen to Warren Buffett, he has 2 rules in investing. Rule number 1, don't lose money. Rule number 2, don't break rule number 1. And that's the bottom line. And what I'm going to do now is I am going to show you what you get if you decide to do this. You're going to get, for a month, you'll get a daily videos of what I described here. I do videos. I give you each trade showing you where you want to enter. We're always entering at point D. Your profit expectation, those are always in your favor. The probability on the trades will be somewhere between 65 and 70%, and that's pretty much what you're looking at. So what I'm going to do now here is I'm going to come over here and see if I can answer some questions, and we'll go from right here. I can't get this thing to open very much to read all of them, but if you have any questions, just go ahead. And someone's asking about the Jesse Livermore book. It's that was a great book, Reminiscence of a Stop Operator. I have read that book probably 50 times. And I can't look at regular stocks here, folks, because I'm not able to do that now. But I can answer some questions for you, like SPYR. I really don't know how to do that. Let me see if I can get some. I can't get these questions to read out. What is it? Is somebody sending? Well, first of all, when you're doing something like this, you're doing a thing like this each day. You really can't. teach somebody what I'm doing here, folks, because, I'm looking at 55 years I've been doing this. How do you expect to pick up anything that I'm doing that you could possibly be looking at? I mean, you have to have time to learn how to do it, and that's the real reasoning behind it. That's the whole key of what we're watching here. Let's just let's see if I can get here. See if I get these questions in here. Yeah, hold on here a second. Oh, the question is, how do you turn the bottom, as whether it's a bottom or top? First of all, when you're looking at A, B, C, D, D is always going to be the lowest part on the bottom, and it's going to be the highest part on the top. Here, let's just do something here. I don't know if this is going to work or not, but let me just try this. I'll get rid of this, and let me pull something up here. Let's just get this up here, right here. This is the gold. Can you folks, I hope you can see this gold chart now. You're able to see this gold chart? I hope you are. Yes, I do head and shoulders. Head and shoulders patterns are very good. You're going to see a head and shoulders pattern here in the gold last year. Look at this. You have a perfect, there's your shoulder right here. There's your head right here. There's your shoulder right here. And if it's a head and shoulders pattern in Dr. Lowe's book, the left shoulder should be equal to the right shoulder. And you can see the left shoulder is equal to the right shoulder. What do you have at the head? You have an A, B, C, D pattern coming in right here at the bottom. The market rallies $250 an ounce, folks, darn near straight up. Then what does it do? It backs off, stops right at a 78% level right here of this move right here, which completes the right shoulder, and then on its way. Where are we right now? We're right in this area here, getting ready to come down into this area right here, which is right around 1342. That's what I'm looking at, but I want to have that happen sometime after Christmas. Right now, we're only $20 away, and with the market this week, it could easily make it, a lot worse. The problem we're having here, folks, is you'll see silver is still heading down to this level right here, which is the $15.70 level. We got to $15.90 today, but we're very close to this, but we're not into the middle or the end of December, and that's what we're waiting for, is that cycle low to come in here, completing this in silver around $15.73. So that's what we're looking at. These are the charts that I send out. These are weeklies, but because I do that sometime in the newsletter to look at the larger picture. But many of the charts that I look at, of course, are much smaller. I'll be looking at a chart. Let's say, for instance, we could look at Treasury bonds here that we've been watching. You'll see here that this is a 4-hour chart on Treasury bonds. You'll notice that we have a 3-drive pattern right here at the bottom. Here we had a Gartley pattern. There's your A, B, C, D coming in right here at 151, and we're looking for this to get up here around the 156 level is what we're looking at in bonds. And believe me, bonds are, you talk about a market that is flat out bearish. I just want to show you this this is Treasury notes, but we'll be able to get this up here. You'll be able to see it here without too much trouble. You'll see here that, you've got it right at this level here. We're getting this little rally, but this is a very, very bearish market. If you look at this on a longer-term basis, by looking at the bond, I don't have the longer-term bonds on this week's letter because I just used the notes, but it's telling us that we're ready to go. Here's one that's very important this past week. This is the U.S. dollar index. You'll notice here, here's the head and shoulders pattern again. There's your left shoulder. Okay, there's your right shoulder right at the right price. What did it do? It came down and matched the right shoulder one more time at the exact price. So you have shoulder, head, shoulder, and you also retested it again. And now you're trading up in here on the higher on the dollar already because you just completed an A, B, C, D to the downside. And here's your butterfly pattern. Comes in. There's your A, B, C, D on the butterfly. There's your 1.618 expansion. There's your 1.27 expansion. So those are just some of the ones that that we're keeping an eye on here this morning. And we'll take a look here, see what we got. Some other one that's really interesting. Oh, here's one that I think you'll like. This is the long-term weekly chart on the NASDAQ. This was Fridays. Mondays we made a tiny bit higher high by about 20 cents, and now we've broken down quite a bit. We still haven't hurt anything really badly, but it looks like we've made a major top here at this 1.618 expansion on the weekly chart. Look at the bottom here in 2016, folks. You have a perfect A, B, C, D pattern. It's almost exactly at the 1.618, and then the rest is history and the way it goes. But the one that really has our interest right now for the next few weeks, of course, is this one on the U.S. dollar, because it has a really strong affinity to going lower. Let me just show you why we were waiting for this to happen. This is the XAU, and you can see the ABCD patterns in the XAU also. The difference is, you see how much weaker it is than gold? See how gold is holding up, the XAU isn't? This is telling you this thing wants to go lower. We're already trading down here, folks. We're trading around 77, so we're probably going to come down and test this bottom here sometime around the end of December, which gold won't do, but this will, and this will give us further confirmation that this one's getting ready to turn up, because we're looking at this final swing in gold. A, B, C, D coming down right here, and then A, B, C, D coming down here, and that takes it between 1242 and 1220 in the gold. So let me just move this over and see if I have any questions. And I said that, you know, the problem that I have here, folks, is that I can't read these questions. They're just too darn small. I don't understand. I don't understand why I can't read the questions. If you got another question, pop it in here, because I can you show the present chart? I don't use volume. The only time I look at volume is when it's record volume. But what I do, crude oil. Crude oil is, this is a good one. Let's just put it up here. We have been friendly to crude oil up until this week. Let's get this out of the way here. There's crude oil. We were looking for a possibility to get this up here, but we were really concerned about this $56 a barrel level, because that completed that pattern right up here. We were thinking it would come down here, hold 56. And right now, it doesn't look like it wants to hold 56, but if it can hold 56, it's got one more chance to get up here. But longer term, this is bearish. But look at the bottom, folks. When nobody wanted it at $40, 41 bucks, look at the ABCD. A, B, C, D. Look at the time up, equal. The time up, equal. The time down, equal. The time down, equal. Bada bing, bada boom. This is what you look for. I'm telling you, I'll make you a deal you can't refuse. Okay, let's move on to see if somebody else has any other questions here. You see, oh, the stop. Very good question, because when you're dealing with these, you have a pretty good idea of what your entry is going to be, because you're looking at point D. But usually what you can do is, like on this particular one, it's trading at, say, it's trading at $41 a barrel. That's 41,000 bucks. Each buck is $1,000. So you have to risk about 80 cents, which is $800, and that's pretty much. It is just 4 letters in A, B, C, D. That's correct. It's not like, you know, people that look A, B, C, D, E, F, and where Elliott Wave looks at 1, 2, 3, 4, 5, and all the reciprocals and all the stuff that they have. You're basically looking for something really simple, a 3-drive pattern or an A, B, C, D pattern like you see here. Those are the ones that you're really trying to do, and especially when they line up with those Fibonacci numbers that we talked about, which are the A, B, C, D numbers, you know, that are so so important to us. See, you're asking the question. Yes, you can buy at point C. That's a good place to buy, because the trend. Remember that on page 222 where the thing is down. Here's point C right here. There's your downtrend. There's point C, and so you want to be selling. And look at this. Look at the distance between March and April was exactly what happened between May and June. I mean, these are repeating over again. Repeats it again here too. So that's what you're looking for, is to try to find that repetition. And when you find that repetition, that's what we're looking at. That's what I'm going to be doing this next month. If you decide that you want to, to subscribe to the program, you'll get my book, The Opening Price, that shows why the opening is so very important. I wrote that 30-some years ago with John Hill. And it's still valid to this day, but because of this 24-hour trading, you got to vary it just a little bit, and that's the main thing that you want to keep in mind. It works on any time frame. Very good question. It works on any time frame, and that's the main thing. If you can, well, I don't know if I have any smaller time frames on here or not. Let me double check here. I don't believe I do. No, I don't think so. I don't have any short-term time frames on these for the newsletter. I do have them on a different format, but I don't have any of those right now to really take a look. Here's the let's get the transportations up here just to show you. This is the weekly transports. If you want to see the big ABCD here, bottom in January, incredibly bullish down here. Look what you did here. You made a beautiful Gartley right here. There's your A, B, C, D right there. Then you see how this move is very similar to this one. This one comes in at 382. This one comes in at pretty much 618. And then you had another one like this, and we just completed the last ABCD on this past week. So we've just completed ABCD, which is drive 1, drive 2, drive 3. So we completed a 3-drive top in the transportation index. So that's made that, very, very interesting, from that point. You wanted to, let's just take a quick look here. Any other questions that we might have? I just can't read it. It's so darn small. Let me see what this question is. Yes, A and C should always be up in an uptrend. That's correct. And B and D should be in the downtrend. And folks, the easiest way you do this is you get yourself a blank chart and just draw in the things, and you're going to be able to see that you're able to do it without without any trouble at all. And that's the real beauty of doing this stuff, the way that the way it should be. So that's why I think it's so very, very important. If we take a look here at the euro, let's look at another one that looks potentially really bullish. Let's get this one here. Here's the Japanese yen on the weekly basis. You can see here there's a Gartley pattern here on the left exactly at 0.618. We then move down ABCD. There's the exact bottom here in 2011. We have this monster move. Look at this. I mean, this is huge. Look where we are now in the Japanese yen. We're trading today at around 112.32. If we can clear 115, folks, we're going to be looking at some possible A, B, C, D patterns. It's going to take the yen, a great deal higher. Remember, this yen used to be 360 back in 1989. So it's got a long way to go if it decides that it wants to do it. But right now, we're just in this little pennant, which was one of Dr. Andrew Lowe's patterns, and you define that by the time of each bottom and each high. So that's the main things that we're watching as we look at those. I'm going to try to see if I can catch another question. I wish we could get these questions so that we could take a look at this. Programming. The question is, I can't read it is there a program? Yes, there's several. The program that I use is Ensign Software. It runs about $50 a month. It draws all these in. These numbers that you're seeing here, these are just what they call Pesavento patterns, because it draws in all the ratios so that I can see them. But it's 55. There's a couple of there's a free one out there that's really, really interesting that doesn't cost any money that draws these patterns too. That one is called Trading View. And then the MT4, MetaTrader 4, the Russians that built that part of that MT4 were my students, and they built these Pesavento patterns in some of the MT4 programs. But you have to understand what they mean and how to use them before you can do anything like that. That's the main thing. One other reason why we were a little bearish, the crude oil, was because of what we have happening here in the heating oil. You notice here, you see this 1.618 in heating oil at 195. Folks, that's been there for 6 weeks, and it couldn't get above it. Even though crude oil was going up all the time, there was a lot of selling in heating oil. Now it's heading south. So that was another one. There's your 3-drive to a bottom here in the heating oil right here when we were doing the same thing in crude. So those are the main things that we're trying to do. Everything's ABCD. Just remember, you learn how to do the ABCD. The rest of it is pretty much easy. So. Wow, I wish I could get that thing. Oh, you know what? I think I know how to do it. Wait a minute. Wait a minute. Does that blow that up or not? No, it doesn't blow it up, but it does. I can't read the doggone. I can't read the darn questions. The thing is so small. Of course, I'm old, but I don't need glasses, so I don't know why I get it. Oh, gap up and gap down. Oh, this is really important. Great question about gaps. There are two things when you're doing pattern recognition that will really light up your tree unless you're really looking for it. One is a really long-ranging bar, a really wide bar like it's 2 times the average range or something like that. Those are the ones you want to stay away from. Let's just give you an example of gaps. Here's the Dow Jones, and these gaps will be filled. Why is this here? I don't understand that. Well, just that. I don't know why this thing is in here. I don't have anything. Oh, it's moving, so I get it out of the way here. Anyway, you'll see the gaps on the Dow. Since September, we've had 1, 2, 3, 4, 5, 6 gaps. We filled one. We filled one on Monday, but we still have this one right here. I think we're filling it yesterday, possibly. So we will start filling these right away, just like we did here. You see the 2 gaps we had here? We came down one more time, and then we're going to fill all of these gaps. So we'll be looking at least 5,000 points lower in the Dow sometime in the next 90 days or less would be my guess. That's the bottom line of what I'm watching right here. I hope that helps about the gap, but it's that's pretty much what we're looking at here. Wow, this is really cool, but the problem is, let me just read this one. I'm starting to see it a little bit better. Hold on here. Very interesting with the numbers. What about gaps? Okay, let's see, up and down. Thanks. Gap could be considered, there's 3 types of gaps, folks. There's a breakaway gap, like you have right here. You see this breakaway right here? This is a breakaway gap right here. There's a breakaway gap right here. That's when you break away from old prices. You have a continuation gap when you have moves like this. Well, this is all breakaway. Well, here's a continuation right here. There's a breakaway, and then the rest of them are mostly continue. And the last one you have is the exhaustion gap, and that's the one that that really you have to really be prepared from. This is what we could have had happen on Monday in the stock market with that big up move and then the down move. But if the Dow gets above those old highs, we could still be making new highs. But boy, there was some really heavy cycle stuff that came in on Monday that was really, really important. That I think would have really been moving. So is there a program? Let me see if I can. I think that's it. Any other questions you guys might have? By the way, what you'll get each day I'm going to go over charts like this by a video. I'm going to send you out emails, charts, probably too many than you want to see, but I'm going to try to get you to learn how to do these ABCD patterns, and you'll get a book called The Opening Price Principle that was written many years ago, but still very good, showing the importance of the opening price, and it makes it very, very interesting to look at it. So we'll see if we have any more questions that we have here. I think my hour's about up, and then I'll ask any other question that you might have, and we'll one other thing we might be able to do is to
Larry, real quick, you've got 15 more minutes.
Oh, good. Okay, good. Let's just try to do this. Let's just go here and move this out of the way, and let's just pull this up here, and let's just take it. Let's just go to look at the gold chart here. What I'm going to do here is I'm going to just show you how easy this is, folks. I'm just going to go to the gold right here. Here's a spot. There's gold right here. Going to get the daily chart up right here. Going to move it over here just like this so everybody can see it. And all I'm going to do now, just move it out of the way just like this. I'm just going to come up here and I'm going to delete it all. And this is what you're going to be looking at, because when you get home, you're going to say, what the heck did that guy tell me? I don't know what I'm doing. All you got to do, boys and girls, is print out a chart like this. Start at the bottom, because that's going to be your A point. And you just draw the lines in like this. Just do the big charts. Just draw the line in like that. And then you draw your next low in like, whoops, just get it right here. And if I can get the pencil to work, and there it is. And then you draw this one in. And then you come up and then you draw this one in. Yeah, let's do it again. I want to show you how to do it. You just do it with the pencil. That's the way to do it. Larry, this is why I have it all done automatically, because I am not the technical expert that you think I am. That's why if you can add and subtract, you can certainly do this. There it is again. There's another, okay. And then you're going to come down. Then I'm going to make it real easy. I'm going to show you how I use it. There's your AB, and then you go up, as you come down again, but there's that one. And then you go up like this. And all you want to do is you want to connect all these dots by doing it yourself. That's what you really want to do. Just, folks, if you did this exercise, this stuff would become so easy for you, you wouldn't believe it. Just got to connect the dots. And I'm not going back here doing these because I'm just going to do the ones that are really close by so that you can just see how to do it. See, that's the main thing. I got to change that a little bit. There you go. And then we come down from the last swing like this. And then you're starting to see that everything that you do is what happens in the past, happens in the future. And that's what you're looking for. You see this move right here? Look what happened right there. There it is again. See, there's AB. There's your CD. There's your AB. There's your CD. Look what you have right here. Now, all I'm doing is, the program that I use, all I do is I hit this bullet like this, and it gives me all the ratios. The problem is it goes out to the 100th decimal point. You don't need that for trading because 1.617 or 1.67 is actually 1.618. See, the difference between the two is virtually nothing, but because the program was written with such importance, you'll see that it's within $1 of the high in the gold. So that's what we're watching. This is why we're looking at, for the market to come down here now in the gold market. See, we're trading at 1266 now. All right. Here's our ABCD. There's A, B, C, D. Now, what do we know? We know that there's a high probability, better than 85%, that gold is going to bottom towards right after Christmas. So we're going to put this, there's Christmas right out there. There's your ABCD move. See, there's a 50% retracement, almost. There's A, B, C is right there. I just want to get over to see it. That's why it gets down to this level right here. Okay, that's going to be an ABCD right around that 1210 level. It'll probably take this low out by a little bit, getting everybody incredibly bearish. And yet, if you look at it a little larger time frame, all it's going to be doing, folks, is look, it's going to be coming down, and it's going to be making a 61% retracement. Almost spot on here at the 12. There's that 1220 level that we talked about. So that's what I'm looking at, about another 40 bucks. I hope that it gives me a little bit of time so that we can get it, you know, one more move down here to take us right about there. See how that would line up perfectly with that last low that we made? That's what we're looking for, right about there. I hope that helps, but that's what we're watching in the gold market. Now, if we look at this on the weekly basis, you'll see it just pretty much the same thing that we looked at once before, but there's the number coming in again. See, we just blew it up to see, you know, where we are. But these are the big ones where you want to be looking for them, because when these happen on these weekly and dailies, those three drive patterns, those are Gartley's, butterflies, those are monsters. Those are mother, God, and country. You can't do anything, you know, against those. Those are everything that you can possibly ask for. Let's take a quick look here at the crude oil, because it's breaking down here. We want to get this up here so you can look. This is just a 15-minute chart, but I wanted to show you the easy trade. This was the one yesterday that looked real interesting. Remember what we just did in the gold market, where we looked at the market, you know, rallying back like that? Look, this is the same thing that happened here in the crude oil market. There's your A leg right back here. There's your B leg right here. There's your C leg, and look where it is right now, boys. Mother, God, and country. We should stop right here in crude oil and have a rally. The rally should be at least what this one is, and that would be $1 a barrel, because the last rally was $1 a barrel. Anything below 56, not good. And what we're going to do here is we're going to go and look at an hourly chart just to show you how we can see it on an hourly chart. Okay, here was your ABCD. We had a really nice rally, a nice double top in here, and here's what we're looking at right here, folks. This is that ABCD that we just did, and I just want to move this over. Actually, this is drawn wrong, folks. This should not be drawn from there. It should be drawn from there. I don't know how that got there, because I didn't do that. I would never make a mistake like that, would I? Oh my God, would I? See, there's comes right in almost at the 61%. We have a pretty good rally, but now we're heading right at the moment of truth here, boys and girls. There's your AB, there's your CD, and there we are right now. And we want to measure to see what that ratio is off the low we had back at 54. Bada bing, bada boom. There we are. We're right about the 60. We're a little below the 61, but Very, very close to it. The problem is this wide-ranging bar. I don't trust that. I mean, it's about $700. I would make sure that it makes a bottom before I look for some dojis. You know, these dojis or tweezers are really nice that way. You don't have to risk you don't have to risk an arm and a leg as you're seeing these things unfold. So I hope that helps. Let me take a look and see if there's any other questions out here. The question is about trend lines. No, trend lines are not that. They're not that important. This is a trend line, of course. Here in the crude oil, it is a trend line because you have a downtrend line. But see, trend lines. Let me just give you an idea. They're not based on the Fibonacci numbers, and that's what you have to base it on. Look, see, a trend line should be like this, correct? That's what it should be like. And if it's right, you should come over here, and it should be spot on like this. See, that's your parallel channel. Now it's close, but you know that's what the trend line should look like. Now breaking trend lines is a wholly different thing. See, this is coming down so hard, it's hard to find a trend line that breaks. But if you find one that is shorter term, like this one, see, when you break that trend line, you get a pretty good rally. But you have to wait because here you're coming down so hard that you just can't do it. Just like you're coming down hard here, you got to wait for some dojis or something. You know, you can't just buy into a falling knife. You know, wait for the knife to hit the ground and then do it. Like this one here. Look how it stays up here after this big run up. So anyway, I hope that helps. Whether it does or not, I don't know, but we'll look at something else here, see if we got another one here. All right. I hope that answers the question about that. By the way, if you guys want to reach me, it's, yes, I do trade with him. He is one of my best friends, one of my best students, Tom Hugard. Got a beautiful baby girl now, and he's a great guy. And with one of the fabulous traders I've ever met in my life. The guy makes a lot of money. If you want to reach me, I'm at larrypesavento@gmail.com, and that's pretty much it. I don't have much more to say. We got about 6 or 7 minutes to finish up here, but had a lot of fun doing this. I enjoyed doing this. My goal is to get, let's say, 2 or 3 people that have interest in pattern recognition, and then you know, then you have you might have something that you like to do. It's not for everyone, folks. It really isn't, because it takes hard work. But it's a leading indicator. It's not a lagging indicator. I've never seen an oscillator system that worked consistently unless it was in combination with a shorter term pattern or something that gave an entry point long before the oscillator turned, because those are pretty tough to do. It's pattern recognition really what we're trying to do here, and that's the real basis of it. Here's one that we're looking at here. We've been short this euro for quite some time, and we're almost at the moment of truth here in the euro. This is a 60-minute chart, and you'll notice that we want this to get right to this level right here. There's your 78% level, where that level comes in at 117.70, so we're 25 pips away. We've got the ABCD structure coming in. You see how all these numbers coming together here, 117.70. That's mother, God, and country, boys and girls. That's what you're looking for, because you have the bigger A, B, C, D forming. You have the 3 drive pattern forming. You have the 78% retracement from the last low that was right there. And it's also a 50% retracement from the low that we made way back here in early November. And you'll notice, look at the ABCD on the upside. Look at the symmetry in the market, folks. Look at this. You see the market comes down here. It took 2 weeks for that market to do that, didn't it? Look what it did here. There's the same move. It did exactly the same thing right here. That's exactly the same move right there. And what did it do? It rallied $2,000 right up to almost the exact 786, and then down she comes. So that's what we're watching. I hope that helps. I sure enjoyed being with you, boys and girls. Keep those cards and letters coming in. Uh-oh, someone said something about weight. Okay. Oh, very good question. Very good question. Which carries more weight, the pattern, the ABCD, or the ratios? The ratios carry more weight. The reason why is mathematics trumps geometry. And That's what they say anyway. But I use them both. I love the ratios best because that is, part of, that's just built into the spiral mirabilis. The patterns can be a little more difficult sometimes, but when they line up together like you're having here in the euro, that's the ideal. Now this might not work, but boy, this is what you're really looking for. You're looking for something, really, really close to this. I mean, this is just about perfect. I mean, let's just go to a 15-minute chart and see what we got here. Yeah, there you're going to see. Here's your 15-minute. There's your ABCD coming down. See, the first one came at the exact 61% retracement, and so what we're expecting now is we're expecting the next one to come in where right there, and where's that going to be? Right where that little beeper is. You see that beeper? That's called Larry's order. So I'm going to be buying at that 1.618 expansion, which will be, whoops, right there. There it is, right there. Now, how much do I have to risk at that point? Well, let's just move it up. See, at that point, this is a $100,000 contract, so I can risk $250. So I can trade for $250 if it's going to make this level right here, and that would make me happy camper if it gets that. Where would it go to? What would be my my first objective? Move this out of the way and get this arrow out. There you go. There's your last move. So you'd move it down here to 1755 right there. And the next move would take you up to 1805. So I'm willing to risk 250 to make 600. So that's a pretty good. Remember, this is a 15-minute chart. So and this could be really big. So I have to wait and see. So those are the ones that I'm looking at, and I want to thank you all for joining me, and I hope I answered all. If you have any questions, it's larrypesavento@gmail.com, and I will be, I do private mentoring, but it varies by person. You have to really want to do this because it's a long-term program. Everybody that signs up with me stays for life. It's only a one-time fee to start, but you have to, you really got to like it. And most people, once you get started, they can't let go of it. So, that's the main thing. So we'll see if you like it or not. Anyway.
Larry, can you go over your special offer again and how people can sign up with you?
Yes. The special offer is, I believe, for a month, I think it's $197, you get the free book. Well, it's not free. You get the opening price book, and then you'll get the daily videos going over the stuff that I did here. You'll get the daily emails that I send out. You get a special report. You'll get the newsletter that I send out every Sunday, preparing for what the market
you can show on all this?
What?
Do you have a slide or anything you can show on all of this?
Oh, dear. Now you're asking for slides. Shut the front door. I don't know if I do or not. I am not a marketer. I wish I was, but I'm not. I don't. I didn't even have a special offer until they asked me to do one here. Basically, when I do these for charity or information, purposes only. But it's really a good deal to do it that way because, you get to see a whole month of it, and whether you like it or not, that depends on you. But if you'll do the work and practice a little bit, the key is do it yourself, because once you do it yourself and see that you can do it, let me tell you, boys and girls, you ain't going to be able to put that pencil down. I can promise you that. I've never seen anybody that saw the light and put the pencil down, because that is not the way that it happens. That's it.
All right, so I interrupted you. If you can go back over exactly everything that's included and how they get to your website to sign up.
Sure. It's just, I don't know how to do. I think you go through the Trade Thirsty website to do that. I hope you do anyway. Yeah, I'm pretty sure you do that because they control everything. You just, you'll get a daily video. Sometimes there'll be more than one video. Like there might be 3 videos one day. I'll skip a day, and then there'll be 1 or 2. But you'll get more than your money's worth. You'll get several emails a day showing chart patterns that are finished. You'll get some ideas on how to do this. You'll get a picture of all the patterns that I have that I put in there. There's all 12 of them, plus some other things that you have. And then if you have a special interest, usually I can, find something that, might stimulate your interest a little bit, because I hope that with all the stuff that I've learned on some of these things, you have an interest that I can, give you some ideas of how to use some of that stuff. But if you'll stick with it, it's worth every penny. It really is. It's a fun thing to do. It's a good way to beat the market. Can't beat it all the time, but you can beat it most of the time. And tell me, folks, when you have markets that go straight up like we've had in the Dow Jones over the past 5 or 6 weeks, those are tough because the markets move usually in trading ranges about 70% of the time. Those breakaway moves like we had in the Dow, especially the Dow, not so much the NASDAQ, but especially the Dow, that is a big deal. So got to watch that. And you just stay aside. Trade the euros. I mean, the currencies and gold and crude. There's so many things. Soybeans, corn. I mean, all of them are just they're just really terrific. I mean, even cattle. Cattle are fabulous to trade. Here, let me show you a cattle chart. Here's one that we focused on this last week. That's been a really good move. Let me just get the Feb cattle up here. Where are you, Feb cattle? Here we are. And yeah, we're still coming down again today too. See, we're still heading lower. And there's another one that has a really strong cyclical component because right after Christmas, there's a strong seasonal for cattle to get up. You see, they made the big ABCD pattern here. Look at the three drive pattern right on the bottom in cattle, folks. That's a $9,000 move in 2 months. For a margin of $980. That's not much. So not saying you buy it all the time, but the high was right at 1.618. So I hope that helps. It's Larry Pesavento at Larry Pesavento at gmail.com. And I that's pretty much I hope that answers everything. I hope I answered every question. If I didn't, I apologize, but you can email me and I will be happy to answer the question if I can. Dan, I think that's about it, Bubba. Uh-oh, looks like we've lost our... Yep.
I am here. There was a question coming in on the monthly, or is it a one-time?
I think it's $97, not $197. I don't really know the price of it. You'll have to ask them. Like I say, I'm not... I'm not a marketing person.
No
I
problem.
think it's.
I'm gonna have them email you because that's the only link I have right now. LarryPesavento at gmail.com. I'm gonna put that in the chat box, and then by the time, hopefully later today or tomorrow, you can find out exactly what website to send them to where they can sign up.
Sure. Yeah. Well, that's. I hope you guys liked it. I mean, I will tell you this is in parting. If what I know now and what I just showed you today, had I not known this in 1959-60 when I first started trading, if I knew what I knew now, I would have paid $100,000 for this presentation today. And I'm not joking, folks. That's how long it took me to get to that spot. But it would have been cheap at that price, too. So, Dan, thank you very much. Everybody, thank you for joining me. Live every day in an attitude of gratitude, and may God bless. And a wonderful holidays to everybody. One thing I would ask you to do, try to help somebody in need during this holiday season, folks, because it's tough out there for a lot of people. And if you can help somebody, and we've certainly been blessed, so try to help them if you can. So thanks a lot, Dan. I appreciate it. And tell Jeanette, thank you very much.